Mismatch. I'll do a quick introduction of Mismatch. Mismatch is it's an opportunity for our community to learn a bit more about a particular topic, and we do it through a fireside chat with one of the founders. So today our host is going to be Bharat. He's our one of the earliest evangelists of Misfits, and he joined Misfits, I think, in the first month itself. And our guest for tonight is Madhav. Madhav is founder of ZFK. I'll do a quick round of introduction for both of them. Bharat is a serial entrepreneur and he's a prolific angel investor himself. He's done about 35 plus investments till date. I think he's invested in the last two investments that happened through Misfit as well. And he's currently building his company called Rovi.life, and he's based out of Canada. So thank you, Bharat. Thank you for taking your time. And it must be really early for you there in Canada right now.
Thanks, Vishal. Yeah, it's an early morning start for me. And to be honest, like I shared, I had a really long night last night. There was a Parastellar concert here. So yeah, I got back home at 1. So I've had about 4 hours of sleep. So if I slur in my speech so please excuse me if that happens.
And your cat would be around, I'm sure.
Oh yeah, yeah. I'm sure. So if you guys noticed, she will keep walking past the laptop. She's like, what is this human doing at such an early hour? That has never happened. So yeah, there you go.
Yes, she is.
Yeah, we come as a package. I don't come alone. So yeah, we'll keep seeing her once in a while.
Good to see you, Bharat. Now, coming to Madhav, Madhav is also a serial entrepreneur. He is currently building ZFK Dark Source, which is getting rebranded to Zippy. Before this, he had his own cloud kitchen brand as well. He ran that for about 4 to 5 years. In fact, last I spoke to him, he also mentioned he has started doing angel investing himself. Uh, I have spoken to few folks in the D2C space, and Madhav comes across as someone which has a lot of insights about D2C as an entire space in India. So I'm extremely excited about this chat today. I'm looking forward to an insightful conversation between Bharat and Madhav. Over to you guys. Bharat, you want to start?
Right, sure. Yeah. First of all, Madhav, welcome to Mismatched. Uh, when Vishal came up with this idea, hey, and we are a fairly young community here, right? That we instead of doing a pitch from the founder, let's do a Q&A round where the whole idea is to get to know the founders better, right? The personality behind the founder rather than a typical, you do the pitch, you get asked some questions and you answer them, and then that's good. So I found this approach really refreshing. I think and that's why all of us are here. And I remember, in March 2022, which is when you guys were raising your round. I think
Ground.
the seed round, and yeah, I think when I think Archana from Matsar VC, she I think introduced you, and
Priyadarshini. Yeah. Archana Priyadarshini.
correct, yeah.
Yeah.
And I just remember, that whole the clarity of thought that you had, and at that point the numbers were very different, and and for me, for some reason it was a very easy bet, because the clarity of thought that you had was very striking. And yeah, I participated in that round, and I've participated I've doubled up in your current round. So yes,
Right.
an early believer in ZFW. Even though back then where I had very little idea of D2C, I just left India, so I've moved to Vancouver early in January. So yeah, it was just the transition phase that happened, and very proud to have backed ZFW very early. The numbers have grown, and I'm really kicked by the story that you've had so far, and we'll continue learning about that story.
No, no, 100%. Good to be here, and we'll definitely update you on the numbers, the evolution since the time you backed us early on last year, I think during our seed run, and yeah.
Perfect. Uh, so yeah, a little bit about the Misfits community. Like Vishal mentioned, we're still a fairly young and growing community, but we have already grown past 300 plus investors with an average age of about 37 plus. Uh, the great thing is a lot of our investors are very early into angel investment as well. A lot of them are first time investors, but I think the best thing that Misfits has done is have cutting down the ticket size of which dramatically reduces the barrier to entry for angel investors. And yeah, some of the deals coming through have been pretty phenomenal. So yeah, Vishal and Amit and Karan, these are the people that I've been in touch with. They've done a fantastic job sourcing some great deals. So yeah, that's a little bit about the community. Uh, yeah. So Madhav, let's begin with the some of the challenges that you see D2C brands face, right? And we'll talk about the industry in general. So some of the bigger challenges that you think D2C brands face.
No, I feel two basic challenges that the D2C community in particular faces, and these, of course, challenges have already have always sort of evolved in the last 2 3 years because this entire space, this entire channel D2C is very new and nascent, right? As compared to the other larger channels, be it e-commerce, quick commerce, modern trade, general trade, and so on and so forth. The two major challenges are rising CACs. I think everybody is sourcing the same set of customers from the same platforms. CACs are increasing. Cost of acquiring the same users is increasing. There is very low loyalty in a country like India. People are very price sensitive. People are in metro markets, in the top 5 7 metro markets, rate of exploration is very high. Uh, and the same set of users are being targeted by different brands in similar categories, that thus increasing the cost of clicks and cost of acquiring these end users. That's a very big challenge, and um, that's the reason behind D2C brands now becoming omni-channel in the last year and a half. Now these D2C brands, which started out say 2 3 years ago as D2C brands, are now new age brands and not just D2C brands. They're sort of also selling on e-commerce marketplaces, quick commerce, and the larger ones, when they scale beyond a certain sort of level, they go down to modern trade, and that's their path to scale beyond say a certain milestone, right? The second channel and the second challenge is always been fulfillment, because if you look at e-commerce as a play, let's just take Amazon for example, right? If you list yourself on Amazon, it's very streamlined. There are 3 4 models. There is Amazon FBA, where you store with Amazon. There is Seller Flex. There is uh, local shop. There is a bunch of others, right? But when you sell to users directly on your D2C channels on your own website, you have to figure out all of that. You have to figure out storage, you have to figure out warehousing, you have to figure out picking, packing, dispatch, courier allocation, all of that. And that's where a lot of brands, while scaling, have sort of faced a lot of challenges. The one major reason being operational design has to change at different scales. When you're doing 10 OPD orders per day, your ops design is different. When you move to 100 OPD, it's different. When you move to 1,000 OPD, it's very different, right? Maybe at a very initial early scale, you can sort of afford to do central fulfillment from one warehouse, one hub in the country. But when you move to something like a 500 order per day, you can choose to do one in north, one in west, one in east, one in south. So that ops design has to keep changing from from milestone A to milestone B, and very clearly defined in the roadmap of the first 3 years. Those are the two broad challenges that the entire D2C community is facing, at least with the D2C channel.
Yeah, thanks for sharing that. I think in a recent Bloom Ventures report, they say that if you really look at the high income category, people earning households earning greater than 6 lakhs, the e-commerce penetration has already reached 37%. So pretty much the low hanging fruit has been taken, and that's why I think the what you talked about, the rising CAC, right? People who are very who really spend a lot more on these niche D2C brands, the
Hmm.
the major acquisition has already happened. As much as 37%. But the good thing is the pie is increasing as Indian economy is rising. So there's still a big scope. But I think the second point that you mentioned is where I think ZFW does makes gives the brands that kind of freedom, right? To, hey, you know what, you want to sell directly to customers, you still have a fulfillment partner who can do almost as well as some of the bigger giants. So that's a good segue into our next set of questions that we have for you. So yeah. And again, for the uninitiated, let's just start with the when the community would like to hear it from you. What is ZFW's key proposition? What are you guys enabling? What are you guys doing for the D2C brands? What do you mean for a D2C brand? If I'm, let's say, starting a D2C brand for you, like the D2C brand in India, what does ZFW mean to me?
Very simply, we're into same day delivery of e-commerce businesses and D2C brands across India. Currently present across five markets: Delhi, Mumbai, Pune, Bangalore, Hyderabad. If you get an order on your website, on your D2C channel, on your e-commerce website from any of these five markets, and you choose to opt in for our services across these markets, your order will be picked, packed, dispatched, and delivered to the users in the very same day with 100% attempt rate, not delivery rate. Users may end up opting for a next day delivery saying, we're not in office, we're not at home, we can't receive the packet, we're not in the country. But ZFW attempts 100% of the orders in the very same day. So what was originally a acceptable 4-5 day timeline for a D2C order to be fulfilled, say 2-3 years ago, and what reduced to say a 2-day delivery last year, is very defining that into same day delivery uh, across these major markets currently, and entering Chennai and Calcutta as we speak.
Interesting. That's amazing. So, what was some of the insights from your past experience? I think you worked with a cloud kitchen chain that helped you build ZFW. Where did the idea come from? That, hey, you know what? Going forward, everyone would need this 1 day kind of a delivery that Amazon offers, but Amazon takes a major cut out of the margins. But some D2C brands would like to have that facility for D2C for customers they're serving themselves. So where did this big insight come from that, hey, same day delivery for D2C brands is going to be the next big thing, and I am going to solve that.
I'll divide this into 2 points. So I'll first take up your second point, which is uh, a lot of brands were earlier listing themselves on Amazon, Flipkart, and were doing good amount of business. Orders were coming across India, no headache in terms of fulfillment. You send your stock to 4-5 FBA enabled warehouses by Amazon, and then it's their headache till the end user, right? E-commerce is good at what it does in terms of discoverability and visibility, but that comes at a cost. And that cost is not only a dollar cost. Of course, high commissions is the dollar cost, but it's also a cost of not owning the user, not knowing who the end customer is. Has Bharat placed an order? Has Vishal placed an order? Or has Madhav placed an order? Right? D2C allows you to own that channel with your customer, own the customer, and exactly know what your customer is buying at what time of the day, at what day of the week, in what quantity, and when is he coming back to you? What's the cycle of the of your product? Um, so I think D2C, of course, cannot be the only channel for a business, but has to be one of the many key channels that a brand focuses on as its go-to-market strategy. among other e-commerce, modern trade, say in F&B brands, Horeca, among all of these other channels, D2C has to be a key focal point as well. So that's with respect to the marketplaces point that you made. With respect to the um, point on where did we come up with same day delivery. So of course there was a problem solution at one point within this journey, but how it evolved was we were in the cloud kitchen business for the longest time, started back in 2015. That time I was 18 years old. Set up one brand called Beijing Street, right in my neighborhood. That did well for us, expanded to the second store, third store, fourth store. 2018 we were at 4 stores, expanded the cloud kitchen business. But 2020 we were clocking good revenue as well, at least as compared to the small cloud kitchens that we were operating, right? COVID came, the first wave of COVID impacted us, and that sort of, we paused our operations for a couple of weeks. Uh, and that's how we sort of got back, and in terms of got time to sort of think of a more scalable model. We thought of optimizing our dark kitchens, and that's when we signed up with a bunch of ice cream brands, and Baskin Robbins happened to be my first sign up. I told Baskin Robbins, I'm going to place your ice cream and deep freezers across all of my cloud kitchens, enabling online deliveries and 30-minute delivery for your brand across wherever I'm present, hence optimizing my existing resources. Slowly, steadily, that became a model. Signed up almost 25 ice cream brands. You would have heard of most of them. Vadilal, have more. Today we do Haagen Dazs, we do Noto, Good Fettle, Getaway, minus 30, Papa Cream, a bunch of them, right? Keventers and a bunch of them. So uh, we signed up these ice cream brands, partnered with existing dark stores, helped them scale their entire online business, their dark store D2C business. When we did this with the ice cream category, which is very temperature sensitive, we thought we could do this with D2C. D2C was a very rising opportunity, growing opportunity for us. And we signed the first cohort of say 20 brands and set up our own dark stores, because the operational DNA required for ice creams was within the cloud kitchens, but for D2C brands, we had to set up our own fulfillment centers. And last year, we set up our dark stores, started same day delivery. Brands witnessed a lot of value in that, because earlier they were delivering in 2 days, higher RTO rates. With same day deliveries, your RTO rates go down. Intent of receiving the order and receiving the product is the highest in day one, goes down subsequently every single day, right? Delight factor grew, RTO rates went down. So it was a growing opportunity for these brands, a lot of value. And today, yeah, we're at about 60 or D2C brands that we service in same day delivery across markets.
That's amazing. Yeah. Uh, and uh, and so when you started the ZFW, you must have had certain hypotheses that, right? That hey, I'm going out in the market to figure out that hey, same day delivery for D2C brands can be uh, can be that big game changer for D2C brands, and whether the D2C brands will lap it up. So again, we're just talking about insights, and so what has your unique insight been while running this business for last 2 years? Uh, what you started with, and what it is right now. So how has that changed, if at all, or is it you've just strengthened your hypotheses that hey, this is what we started off with is has just been validated by the market big time, and let's just double down on it. And what are some of the experiments that have you've done to reach reach where you are right now?
I mean, a bunch of learnings, what we started off with when we were on the blackboard or whiteboard thinking about our model. At that point in time, the picture of the business is very different from what it is after 50 brands, after 12 months, after X tens of thousands of orders, etc., being serviced, right? Market teaches you, market gives you the insights, brands tell you what they're valuing. I may think brands are valuing a same day delivery because of the customer delight, but the brands may feel they're valuing same day delivery because of a lower RTO rate. So there are different sort of points of views of different brands. Nothing majorly changed. I think value proposition just got sort of widened in terms of different brands opting in for our services for very different reasons. Some brands would opt in for our service. We have a brand for car accessories called Roger Car Accessories. Somebody orders a mechanic comes to the car and says, I want one pair of shockers for the car. The shocker reaches them in the same day. The mechanic comes to next day and installs the shockers. that's a use case we could never think of, right? We're entering into a cooler brand where a cooler brand says, before summers for 3 months, we want your services for small portable coolers,
Mhm.
because when you need the cooler, you need it right now. It may seem to be a planned purchase, but when it's needed, it's an impulse purchase.
Right.
So different use cases where brands came to us and said, I think this is where we fit in. And that only market teaches you, different sort of brands and categories teach you. You can't get into market with all of those insights.
That's amazing. Uh, so yeah, when we start talking about brands, uh, so and again, I think at the start of the session, you guys were you were already talking about the reducing the onboarding time for for the brands that associate with the ZFW. So how right now, what does the process look like for brands to discover you? And do you have like a big sales team that reaches out to the brands, or are the referrals coming in? I know that a lot of D2C brands, the founders have already invested in you. So how has that journey been? Has become better over the years? If you can take us through the journey.
Sure. So I'll first cover acquisition and then I'll cover launch, right? Acquisition happens very clearly through three channels. One is inbounds, one is outbounds, and one is investor referrals.
Mhm.
Inbounds come on the website. Bharat from Misfit brand can fill up a form saying, I do so and so number of orders in this city. I am a Shopify backed D2C e-commerce store online, and I wish to opt in for same day delivery. Somebody from the BDR team will reach out to you in the next working day and start the process, explain what ZFW does, what is our key value proposition, where we fit in, how do we get started, details, modalities, and get you onboarded, right? That's one channel. Outbound is, there's a separate outreach team which will do an outreach to about 100 brands every week on email, and we use certain tools, certain SaaS based tools, sales tools, which actually help us do the outreach. A bunch of them will reply, and then we'll schedule meetings, and then again the acquisitions team or the partnerships team comes into play, starts the conversation, takes it forward. Key enterprise brands, I will jump in, and otherwise we have a good 4 member partnerships team closing out brands. um, Third is the very strongest channel of all, and a very strategic one. Almost 30 D2C founders are, maybe 30, 40, 50 basis, the most recent round as well, are our investors. And that makes it very easy for us to get into the other D2C brands who aren't our customers or investors, right? Investor referrals is a very big source of acquisition for us. And yeah, I think these are the three basic channels of acquisition. And uh, coming on to the launch, irrespective of the way these customers or these brands are acquired, when the agreement is signed, from that point till the time the first order is serviced, typically between 15 to 21 days, can be lower or higher depending on how complex their D2C website is, how many SKUs they have, and how ready they are. Um, Typical, you have to integrate into their D2C store, set up the different cities in the system, start filtering those orders and pulling them, and call for stock, which is call for inventory. The inventory sent to our dark stores, do a quick training on packaging, and go live.
Perfect. I mean, we have a bunch of investors who work for D2C brands. So hopefully you will onboard a few more investors and a few more referrals from Misfits community. That's amazing. So the next set of questions that I would like to and again I'll ask I'll club a few of them and you can answer them. So what are some of the brands that have associated with ZFW from an early stage, and what have some of those brands been who have been with you for the longest time, and how have their expectations over time changed, or is it have they really remained the same, right? What they started off with, hey, you know what, we are associating with ZFW for same day delivery, and even 2 years down the line, that is the expectation is the same. So Uh, just talk us through, some of the early brands that you onboarded. You said that you started with a cohort of 20. How many of them are still with ZFW, and how have their expectations over time changed?
I think leaving aside one, those first 20 are still there with us. In fact, I'll give you examples of brands which started with us in one city, Epigamia. Founders are our backers. Started off with Bombay. Today they're in about all five cities. I think leaving one city, or maybe they're in all five cities. Baskin Robbins started back in 2021. Till date, we've just raised the most recent build for them. Alt Foods is another sort of brand in the plant-based space. Started off with one city, today they're doing five cities. Same with, I was telling you about this car accessories brand, right? Roger Car Accessories. Same with a seafood brand called Gadre Foods. It's a very big online seafood platform, and they do a very massive order volume on a daily basis across markets. And they started off with one market, did two, did three, did four. Today, I think leaving one market, they're there in all four markets. So brands have only scaled. Typically, uh, how brands look at it is they don't want to shift their entire logistics to a new player or a new player that they're trying to experiment with in the first month. They start off with one market. If we're able to sort of perform in the first market, is when they scale up to the second, the third, the fourth, and so on and so forth.
Right. And I mean that's a very low churn rate. That's amazing. I think for a
Baskin Robbins, they have another brand called Brooklyn Creamery. I do 20 stores for Brooklyn Creamery in Delhi.
nice. Okay, and I mean, again, I think a lot of brands have seen a lot of success with you guys, and have opened up more cities. More, the order volume has risen. But let's talk about some of the brands that probably dropped out. I mean, every business faces those situations. So. If you want to just talk about a couple of brands that started off but then pulled out, what have your learnings been from them? And if you could probably have some anecdotal uh, you know uh, how I mean, I'm pretty sure once they churned, your team must have reached out to understand what happened. So what have and how your process engaging with the brands, your customer success team, how have those processes changed with some of the brands that have dropped out?
So I'll tell you, and I won't name brands. So there was a cheese brand which started off with us a year and a half ago. They featured in Shark Tank this season, um, and they left us after about 3 to 4 months because ZFW was not able to manage the shelf life issue. We're used to ice creams which are high shelf life. We're used to D2C brands which are high shelf life. We're not used to brands which have like a 3 day, 4 day, 5 day shelf life, right? When you have a lower shelf life, that means batches are coming and going and coming and going with shorter shelf lives, and there's a lot of RTO. So RTB, a return to vendor. So products are coming into the dark stores, they're going back, they're coming, they're going back. But this brand is now relaunched with us and are doing all five markets. So after a year, they came back to us in our new model, same day delivery, and they're doing all five markets with us.
That's
And
amazing.
we took care of their entire Shark Tank search. A
That's
lot of the brands that we work with are Shark Tank brands. Amor Gelato is Shark Tank this season. Perfora is Shark Tank this season. This brand is also Shark Tank this season. Over five, six brands of ours went on Shark Tank this season. And we
that,
took care of the entire post Shark Tank search. We had a whole control tower in case of one of these brands where we did about 1,000 orders in 1 hour.
that's amazing. Must be a very satisfying feeling that I mean you've enabled some of these brands to reach that scale where they become so much more investable to most investors. And Shark Tank is one is something that has a great reach when it comes to pitches, and to have so many of your brands actually be there at Shark Tank must be a very satisfying feeling that you've been a big reason behind their success and scale.
Last
So
season, last season we had three brands on Shark Tank. This season Till now, we've already crossed about 5 or 6 brands. Last season, we had Getaway and we had Meteor. There's the next brand called Meteor, uh, and they're also live with us across all markets.
Has that become a KPI for your team? How many of your brands actually show up
Just
at Shark
we-
Tank every
My
year?
sales team, how many of these brands have been acquired from Shark Tank, or how many of our brands are going on Shark Tank? So that's an internal. During Shark Tank, we have a separate two-member team actually acquiring those brands.
That's amazing. Okay. So yeah, next set of questions and Misfits community. I would like to tell you, we tend to invest a lot in technology players, right? So. So the next set of questions that I have for you are around technology. So it's a it's a fulfillment logistics company. What role, and I mean, I'm at the cost of sounding naive, how big is the role of tech in your day-to-day operations? So if you could just talk about, how have you enabled brands to use technology to achieve great results? You've covered a little bit of it in the sections earlier, but I mean, we would like to know, you know uh, what have your plans been so far, and what are your plans to use more and more technology going in the future as a order volumes rise across stores? So yeah, what do you?
No, I think technology is the backbone of the entire play, right? Right from the app that the rider uses, to the API that connects Shopify to us and sends us orders, to the order filtering engine which filters the entire set of orders into the subset of orders that we're actually fulfilling in those specific cities, and for the SKUs that we're keeping, to the engine that actually to the logistics intelligence engine that actually prepares the batches and routes according to the weight the rider can take, the kilometers the rider can cover in a day, the number of touch points he can stop at, traffic on those routes, and the temperature sensitivity in every route, right? So to all of those factors and filters in different pieces of the value chain, right from pulling the orders from the order source till delivering the orders and sending a user communication saying, "Hi, Bharat, thanks for ordering from Epigamia. Here's a link to track your order." That tracking link, everything is tech enabled. I'd say
Nice.
a rider and a dark store enablers. Technology is the backbone here.
Nice.
Without the technology, we can't do same day delivery. And say there's a tech shutdown for a day, we shut down services.
Interesting. Perfect. And in terms of your, I mean, I can understand, the role of tech in user interfacing, right? Where someone who's tracking the order, they've ordered it, all the touch points that the end user has, so that can, and again, I think, but in terms of what does it mean for brands, right? So you have I mean, as compared to your competitors, how is your tech and that's I think that becomes a big moat for you guys, right? So how what are you doing differently for brands to learn and I think you touched upon it initially, that we are enabling you to own your users, right? And the kind of data that you help collect for brands, for the users, right, for the end users. How what kind of tech play is there?
So for brands, what matters in the end is SLA, right? Are you actually delivering your orders in the very same day or not? Technology enables that. We don't give them data, they give us data. Orders come to them, it's a D2C website. They own the data first and then pass on the data to us, and that's how we filter the orders that we have to service, right? So we don't have a major data play there. Though we own the data, we exactly know what product and what category sells in which pin code at in what quantity at what time of the day on what day of the week. We sit on that data, those analytics for next in line brands to plan which markets. Of course, there's a big data privacy layer involved, and we can't share customer data. We sit on that data, but definitely giving insights of what sells where is that collective data that we sit on. Point number one. Point number two is to enable the SLA, to ensure SLAs are met. batching the orders, routing the orders, picking them, packing them, layering in OMS, connecting that to a logistics intelligence system, connecting that to a sort of a CRM system which can talk to users, have multiple touch points. Your orders delivered, you get a message. Your orders attempted, you get a message. You're not picking up your call, you get a message. All of those features, right? They're all stacked up into one tech stack,
Mhm.
which actually stitches the entire flow, right, from order pulling till order delivery, which ensures the SLA, which is the most important factor for a brand working with us.
Yeah, perfect. That's amazing. Uh, and in terms of some of the tech used in your stores, right now, uh, and again, one of our mafia members, Gaurav, he had an interesting observation from your tech. So he had pointed a question, shot a question to us that the daily order per store. Is on a lower side at 12.5, right? And he did a base, the calculation was very simple: 60,000 orders a month, and you have 160 stores. So it comes down to about a 12.5 orders per store per day, which seems to.
Then there's a layer of detail there. 160 stores are small dark stores pods, right? The real dark stores are five, which actually do same day delivery. The other smaller dark stores are MFCs in our definition, micro fulfillment centers, which we where we partner with existing facilities, use underutilized space within those existing facilities, park our instant delivery ice cream brands. All they're required to do is store, pick, pack, and dispatch and deliver. There, the order volumes per day can be 10, 15, 20. But at our main dark stores, we do about good 300, 400 OPDs because they are the real volume. So I'll explain. So Delhi would have two of these large carpet dark stores, one in Malviya Nagar, one in DLF Phase 1, which do same day delivery for all D2C brands. But Delhi has 45 MFCs, which hosts ice cream brands in small hyper local hubs. And anybody ordering from a Zomato, Swiggy, their own D2C website, etc., will get their order from the nearest MFC. MFCs are for all the F&B categories, ice creams, beverages, etc.
Okay.
For the
Uh,
non-consumable D2C category, orders go from one dark store or two dark stores in the city. In Bombay, it's Andheri and Malad. We're coming up with Navi Mumbai. In Hyderabad, it's Manikonda. In Bangalore, it's Koramangala. In Pune, it's Kalyani Nagar.
right. And at what for your bigger dark stores, at what orders per store per day do you achieve store level profitability? What's that number
100 OPD.
at 100 OPD?
Yeah.
And for all the bigger stores that you have, you're already doing more than that number.
100%. Delhi is more than that. Bombay is more than that. Bangalore is more than that. Pune and Hyderabad are around that, but they're getting there. They're smaller markets, but they're getting there. We
Right.
have booked order volumes for those stores already. For Delhi, Bombay, we have booked order volumes to about 700 OPD already. We're just rolling those brands out.
And in terms of any in-store operations, are you guys using more technology to do? Let's say right now it's at 500. Once it reaches, let's say, 2,500 or 5,000 orders per day per store. Would the operations look in-store operations look the same at that level as well as it is today?
So I'll tell you when scale, let's take Delhi for example, right? When scale changes, a dark store can only be, we've moved to the maximum size of a dark store. Just last week, we moved from 1,200 square feet in Malviya Nagar to 3,000 square feet. That's the maximum size of a dark store that any quick commerce platform can also operate. So when OPDs will go above 500, 600 from that dark store, is when ZFW is going to put up another dark store in another zone and divide orders. Say half of the pin codes get routed to South Delhi, the other half of the pin codes get routed to say West Delhi, right? So you add more dark stores as density increases. You can't keep increasing. A dark store will never be 10,000 square feet in the middle of the city. It'll always be these small 3,000 square feet hubs across, and you'll keep increasing them and reducing the kilometer coverage, hence reducing the travel time of riders and increasing the orders per rider per day. There's the metrics in place with every ops design.
Perfect. Yeah. So let's talk about some of the how has business been for last 6 months. What have been some of your notable high and also some of the low points that you've seen in last 6 to 8 months. If you want to talk about that.
I think last quarter was flattish for brands, and when brands witness a flattish quarter is when we also witness a flattish quarter, because the entire effect gets waterfalled onto us. We're enablers for them. But then this quarter has been encouraging. Overall, we've not had a problem in acquisition. We've not had a problem in launch. Of course, launch timelines are being improved by the month. Um, the larger problem is that we always operate like a bootstrapped venture, right? So early on, when we went on to set up the first set of dark stores across these markets, we put up small dark stores, 800 square feet, 1200 square feet. Now is the cycle when order volumes have scaled to a level that those dark stores were small. So every month we're shifting every city into a large dark store. So Delhi this month has gone to 3000 square feet. Bombay in March end is going to go to 3000 or 3500 square feet. Bangalore will go to 3500. So that entire set of all dark stores is moving into larger dark stores, because the speed of at which demand is increasing, our supply is not increasing. So we're bucking up on supply now.
Mhm. So, and what have been some of the challenges or some low points in last 2 quarters? So, something that you're disappointed with, or something that you thought but, would go a certain way and hasn't turned out to be.
I think Bangalore market for us has been very encouraging in terms of demand, but fleet management has been something very challenging in Bangalore. And I think because all the tech companies, right, Dansos, Zomato, Swiggy, Zepto, Blinkit, all of them are there. So there's always a fight for last mile facility there. But I think we've this month we've now sort of sorted that piece out. We've just sort of changed the rider design model, and I think that was a point of stress for the last 2 months, which we've now sort of figured out. These are small hiccups that like every month has a different flavor of the hiccup, right? So it's an ongoing thing. We're used to it.
Yeah, what's a startup life without challenges? I'm sure
Yeah,
everyone. Uh,
100%. Every day we wake up to a new challenge. I mean,
nice.
it's not a morning if there's no new challenge. If there's not like five groups where I'm tagged, so it's not a morning.
That's amazing. And what are some of the initiatives that you are excited about in next 6 months to 1 year after you're done with your current fundraise? Are you looking to add any key members to your leadership team? Anything that you are excited about in next 6 months to 1 year time frame?
So yeah, so on the first point, I'm already done with my fundraise, capital in the bank. None of my time is being occupied by that. What I'm really excited about in the next 2 quarters is that I want to roll out all the signed contracts. Right, I'm sitting on a stack of signed contracts worth about 40 to 50 lakhs. I have to roll that out fast. And second is I'm excited to move all cities into larger dark stores and work on supply. Those are the two sort of key points, focal points for us. Rest all seems to be on track now.
That's amazing. And in the longer run, right? That was the near-term future. In the longer run, what do you guys, want to become, right? Uh, and what do you see are some of the risks associated with you achieving your long-term goals?
So I think the biggest risk, which I'm now solving for, as I mentioned multiple times, is the speed of launch. Speed of rollout is very important, right? Our go-to market is setting up supply, but rolling out demand is also another piece of go-to market. So sort of streamlining that piece to increase the speed of scale is what I'm currently working on, and which is a risk currently, which we're now hedging. And long term, I think we want to be that one single same day delivery backbone for D2C brands and e-commerce businesses across India. Today we're in 5 markets. This phase closes with Chennai and Calcutta. After Chennai, Calcutta, we plan to roll out the next set of 10 tier 1 markets, which include the likes of Chandigarh, Jaipur, Ahmedabad, and so on and so forth.
Interesting. So the next phase of ZFW is going to explore tier two cities, which will have its own challenges. Pretty sure that'll be an exciting journey for you guys.
The blueprint is set, right? So think of it like when we enter a Chandigarh, pick a 3,000 square feet dark store. The last mile uh, processes are already blueprinted. Uh, we offer those. Demand is not a problem because we're going to be sitting on X number of customers by then. So before we go out in the market, we don't need to go out in the market to offer the same set of customers services in those markets, right? With every new market being launched, demand becomes an even lower, even easier sort of challenge to solve in those newer markets because we sit on X number of customers already ready to move into those cities. So that not being a challenge. But yeah, next 10 markets are small markets, mini markets, but very exciting.
Right. And has there been a situation with brands where some brands reach out to you and say that, you know what, we've been working with you in Mumbai, we're happy, but we would like to expand our operations with you guys in Delhi or Bangalore, but then you guys have to say that, you know what, for us to plan for a brand like you, and let's say, you talked about a very seasonal product called air coolers, right? It's a very seasonal product, but then they do occupy a bit, some bit of space. So has there been a situation where you have to say to brands, hey, you know what, right now we can't take you, and we'll take some time to accommodate you in other cities.
I mentioned, no, I'm sitting on a stack of signed contracts. I'm not able to launch because if you have a chance to go to Andheri in Bombay, you'll see my dark store. People are walking on top of each other. So I'm creating supply right now. I'm sitting on signed demand. I'm creating supply right now. It's
Right.
not happening with newer customers. It's happening with existing brands.
Right. I mean, yeah, that's a good problem to have. That
It's like two sides of a coin where there never has to be a problem. So my partnerships team is given a target to keep all dark stores at 100% capacity, but my infra team is given a capacity that no dark stores to go beyond 60%. You always need to have capacity for scale, and you cannot solve that problem because the solution is opposite, right? So not solving the problem is the solution.
nice. Perfect. So those were some of the questions that I had. But and in the last few
I think
minutes of our
few folks have posted questions in the chat box. We should also take them one by one.
right,
Adish, we can start with Adish. Adish, on unit economics, we typically charge 80 to 90 bucks up to 500 grams, going up to about 100 bucks for a kg, and then there's an additional kg charge on top of that. This includes cost of storage up to 30 days, picking, packing, dispatch, and delivery with 3 attempts. Um, all our transactions are profitable. We end up spending 65% of the proceeds as direct costs in terms of the cost of dark store, the cost of last mile, and the city costs. We end up contributing somewhere between 32 to 34%, which is our CM1, contribution margin one. Um, our model doesn't have a CM2 because there's no cost of acquiring a user. The eventual cost of acquiring these large enterprise customers is capitalized before EBITDA, which is the G&A expense, the sales team, the partnerships team expense. That's on the economics.
There's
So,
another question by Sudhakaran. He
yeah.
said, how are you executing last mile deliveries? Do you own full-time delivery executives or is it outsourced to third-party logistics? How does your unit economics looks per order? Which is same, which is already answered.
So between 3PL and on payroll, there's another model that has come up called gig, which Zip does and Borzo does and a bunch of these, which is riders as a service. So Zip places say 10 riders at my South Delhi dark store. They're dedicated riders for that day from 8 a.m. or 10 a.m. till 6 p.m. or 8 p.m. And I can increase or decrease rider supply basis demand, and taper it up and taper it down, hence not burning on last mile deliveries. They don't sit on the payroll, but they're dedicated gig workers from a contracted company, similar to the likes of Zip Electric, Borzo, and a bunch of others. Every city we have a bunch of impaneled players.
Got
Uh,
it.
Look, economics per order, as I mentioned in the previous one, that was those economics were on at the order level. Riders are very simple. These companies typically charge 800 to 1,000 rupees per day per rider, which includes the cost of the rider, the cost of the vehicle, the cost of fuel, cost of maintenance, and cost of relieving. That means that on the seventh day of the week also they'll have a reliever come. So no rider goes on and off. So it's typically a per day per cost per rider.
You want to
Right.
quickly talk about competition in this space and how do you stack up against them?
We've not witnessed a direct model, but there are certain models in the periphery. There are courier aggregation models which brands compare us to, with like likes of Shiprocket, Picker, and so on and so forth. These are typically select your courier, best uh, sort of performing courier in that pin code, and that's a basically courier assigning engine, right? On the other side, this is on the logistics side, how brands typically book a courier and send it out. That's where they compare us. On the other side of the fence is the storage, because we have stacked up and stitched storage and delivery, right? So in delivery, brands compare us to these courier aggregators, and storage, they compare us to these warehousing players like Amiza, um, Warehouse Now, Shiprocket Fulfillment, and a bunch of other traditional players, where they sort of store regional inventory and then fulfill all sorts of e-commerce orders and whatever regional PO based orders that they get. But not witnessed anybody till now stitching up the entire storage and logistics piece within the cities focused on D2C.
Right.
Bharat, you were asking something that thing.
No,
Yeah,
no,
sorry, go.
I was just pleased to hear that Zip is another one of my portfolio companies. So when each portfolio company feeds into each other and prosper, it's music to my ears. So that's amazing to hear.
Right. Vikram has another question. What stops delivery from vertically integrating to come into your space? It's a big challenge. No, delivery is already big, but I think it comes down to the DNA of the company, right? It's not only delivery. Even Zomato can do this. They sit on fleets. Blinkit can do this. They sit on fleets and dark stores. But they're a quick commerce company. They own the users. They own the inventory. They buy the inventory and further sell it to users, right? Similarly, delivery has the DNA of courier aggregation, not courier. They have a DNA of courier fulfillment and of B2B logistics as a service, not more so hyper local milk run based deliveries.
Got it.
Perfect. We are
Does
on
anyone?
top of the hour. Are there any other questions from the community that we should ask? We should address. Last few seconds. We have hardly any time left. I'm sure Madhav has a call with his lawyer, and lawyers, I'm pretty sure, very
IP team.
huh?
Yeah, with my IP team.
Oh yeah, and I'm pretty sure they're very particular about timings, right? So yeah, won't hold you off, Madhav. Thanks a lot for a very insightful conversation. And I don't know if we have any other questions from the community, we'll probably forward it to you, and Vishal can communicate it back to the community. So I hope you had fun. I'm pretty sure, like. Looking at you, the passion and with which you talk about your business, that is that is just amazing to see, in a founder. And that was like I said, right, when we started the call, that was the first reason that I was like, hey, you know what, this guy knows his shit, and they'll figure it out, right? And with a smart team, and you guys have, that's pretty amazing. So
Right. No, it's been a pleasure, and looking forward to any other questions the community has.
Thank you, Madhav, and thank you, Bharat, for being a wonderful host.
Anyone, in fact, any free from
Thank you. Thank you.
to
Yeah.
Faisal, Faisal, are you asking a question?
Sorry, I think I got unmuted by mistake. Very sorry.
Okay.
No problem.
So I was saying, thank you, Bharat, for being a wonderful host. Thanks a lot, and thanks, Madhav, for coming on the show. Thanks a lot. We had a wonderful session today. In case there are any other questions, then probably I'll reach out to you again.
For sure. I think Anurag has just put in a quick comment. Would love to visit one of the dark stores. Anurag, which city are you from?
He's in Bangalore.
Anurag, I can facilitate a visit in Koramangala whenever you're free.
Absolutely. I think I was in Bangalore for about 11 years before moving to Vancouver. So yeah, once I go head back to Bangalore, probably yes, I would like to visit one of your stores as well.
And probably I'll ask one question on behalf of Bharat. Are you looking at expanding into US, Canada market as well?
Right now, India's a huge market for us.
Just kidding.
Yeah, in India is a huge market for us, and there's a lot of room for scale currently. So laser focused within the country.
Which I was just asking for me to visit one of your dark stores. If you can just open one here in Vancouver.
Yeah.
Right. Yeah. Thanks a lot again, Madhav. Good luck with your journey, and I hope you'll onboard a few more investors from the Misfits community, which will help you with the referrals and the ecosystem that you're building. And you already have some stellar investors on board, some very relevant investors. So yeah. Thanks a lot for your time, and have a lovely evening.
Yeah. All right. Thank you, guys.
Everyone. Thanks, Madhav. Thanks, Bharat. Thanks a lot.